Good afternoon, Scott Redler, T3 Live Chief Strategic Officer. It's Wednesday, and today was one of those days. Just one of the days that, thin, erratic, whippy, easy to get hurt. The first part of the day started out, very weak. If you had some overnights, there were some ways to get out. Some spots actually get short. It looked as if for the first time in the first 30 minutes, perhaps we could press through that, 208 that we talked about. Then markets made a low, and then all of a sudden, a little rally back above that 208 into the Fed minutes, and then the Fed minutes were early. Fed can't even come out on time, and then took the market almost positive. And then if you wanted to wait and you missed that move, and you're like, okay, let me buy a dip because who knows, maybe, things could act better. They just pretty much brought it way down further than you would have liked, and then in the last 20 minutes, almost back to the highs of the day, and then in the last 2 minutes, back down below 208. Like, no way you could, really deal with that unless you're really playing extremes or really have a thesis, and it's very hard to have either of those in the market. You look here at the chart of, the SPX, you'll see, they keep saving this end of the range here. At this point, I'd rather this actually just break, get it over with, bring us back down to this 240. Why play with this spot when it's just, getting so tricky and hard to deal with? Here is your inside wedge again. Here's the top end of your range. And with all of this action within here, you're having stocks getting taken out to the woodshed. So, you're kind of thinking that, that the range is going to resolve. Every day it's different, actually. Right here it felt as if it could have resolved to the upside, and then, all of a sudden, boom, now it feels like it's going to be to the downside. That's how crazy this market is. But, you look at overall sectors, and let's go to the diamonds first. Diamonds have now been below the 200-day for quite some time. Usually if you're a stock and you're below the 200-day for this long, chances are some follow-through weakness could happen. It's been below this end of the range for quite some time now. So this is not looking too healthy to me. IBBs are, trying to hang in there, but overall, if the longer it stays on the right side of the trend that we talked about, I'm just going to draw it from here, the higher the probability or the more vulnerable it could be to breaking below this. There's lots of things that could happen fast if the market wants to happen fast. It could hold this and go, but it could also break this neckline at some point and give you 342. So it's these things it's either plan A or plan B. Plan A, it holds and market hangs in there and frustrates all the bears, or plan B happens fast, and if you don't want to be buying that dip at the time that it doesn't happen. So right there could easily be a head and shoulders top set up for a move to the 200-day. Easy. So you don't know, but it has to break that. You have the Russell also below the 200-day again. All right, it's below the 200-day, not above the 8 and 21-day, not trending like it did here, and it seems as if it wants to hit an air pocket, this too could have an air pocket. So does this happen? This is why every time the market pulls in, the bulls get a little worried, because there are some spots that are vulnerable. Same way if it doesn't, every time it's looked like it's going to break, it doesn't, and it's hard on the shorts too. But right here, it breaks 119 and change, you could see 114 fast. Okay, same thing like I just said with the SPX. The one time that it doesn't hold in here, 2040 could happen fast, and then if things really deteriorated, went lower, this 1980. So things are fine when they're in the range, or not fine. It could be frustrating depending on how you play it, but if something happens and it falls out, it could fall out fast. So these ranges, wear everyone out until resolution happens, and if it does happen, one of these times you buy into this zone, and you don't do it a level versus level, you could really be taken out to the woodshed. You don't want to do that. But until that happens, you just got to stay on guard and try not to get too frustrated. It looks like the futures are going down a little bit after hours. Now look at this move in the spiders real quickly. Just go to the 1 minute chart. So where was the oh, here it is. So if you were short even, you were saying, okay, I think we're going to close in the lows, but I'm going to give it to here. you could have got stopped out. Or if you said, okay, I'm going to give it to here, you could have got stopped out. And then coming into the last minute of the day, like, oh, it's closing okay, maybe I shouldn't be short. Then this bar was at 354. You were at 209. 209 at 354. In 6 minutes, it went all the way down to close pretty much, on the lows of the whatever that 6 minutes is, engulfing all this whole entire range. And basically, so if you were shorted, you had to be, oh my goodness, maybe they're going to stay in the range. I shouldn't be short. We have been gapped down 4 or 5 different times. Maybe next time's a gap up. You could have covered. And same way you said, oh, I got to be long in something. Boom. That's how both ways gets kind of taken out. And then I think, if I here real quickly, you can come on me. What's the spiders doing after hours? Looked like they were trading down. After hours, not much. 207.94. So down another 35 cents. But anyway, that's that. We had some strong stocks that were stronger when the market was weaker, and then when the market bounced, they rallied and still look fine. You look at Google, it still looks as if this will be a high beta name that probably makes new highs first. How they get there, it is what it is. Amazon, it also in this tight range, still above the 8-day, kind of hit the 21-day. That's why some traders get weary if they're sitting in it long. Yes, so. And still be okay, yes, but that's a decent move below it. That's 11 points. So who the hell wants to sit in 11 points to the downside? But anyway, there's the 8-day, and every time you try and short this, it's been bouncing off of it. So both sides are kind of frustrated there. I would just do a little bit less. Netflix, I wouldn't say is bending, but it's lost a little bit of momentum. Here was that breakout failure. Or not breakout failure, just couldn't get above the 126 and hold, and then you had some downside follow through. Can it get to the 21-day? It can, but does it have to? It might not. But right here, it's been following the 8-day pretty much since late July. So you want to make sure that if you're in it, sitting as a swing, that it doesn't all of a sudden start to lose some momentum. MBLY came in long today. I actually had a decent out on this one. I said to myself, if it holds the prior breakout around 62, I'll stay in it. And then it had a pretty negative article in Seeking Alpha, who knows why, whatever. So I trimmed mine real quickly, and I said on Redler All Access I was out, and then boom. So now the question is, this potent bar below the 21-day, if you've been in this thing, since breaking out above 49, if you have a lot of it, I would have at least sold some today, because you don't know, when momentum leaves and if the market does get weaker, which it might or it might not, these type of expensive names could come down fast. So if you're in it from the red dog reversal here, or you're in it from this breakout here, or even from here, you can lock in some gains. My rule for momentum names is you try and stay with it long as it stays above the 21-day, which it did this entire time. You had this one little faulty spot when the market looked like it was going to come in, and here's a 50-day. So if you want to give it to the 50-day, that's cool too, but you just want to be careful that sometimes these momentum names unravel fast, no matter how good they are. Guys in Shack, geez, they really took some people out to the woodshed. Everyone was on earnings it failed, and then on the secondary couldn't hold 60, and now look at it. So there's stock everywhere now, and people can't trust it. So that's why I haven't been trading this thing. Tried it on the day of the secondary and didn't hold 60, so I just got out of the way. What was stronger today was Facebook. At least, if we need a strong stock, this still is sort of strong. Here's your red dog reversal. Never broke below the prior day's low. If you were in it overnight, you could have easily got out of it without losing much. And if you are in, if you're still thinking that the market needs leaders and we could go higher, this is in that camp. So Facebook's still in that camp. Google's still in that camp. Amazon's still in that camp. Netflix is possibly still in that camp. And but again, getting a little, little faultier. And Apple, could have been worse, I guess. Apple came in long, saw that it really couldn't rally off the bat. I was planning for it to kind of hold this spot, and it didn't. So I got out. I actually got a little short, whatever, went down a little bit, but I'm not short overnight. It's still holding above this, and it's still building this lower area. So jury's out. I don't think you can blindly short it, but it's been below the 200-day for quite some time. This red dog reversal still has some power. This high low is still here. So we'll see what happens tomorrow around this pivot. Perhaps it tries to hang in there and stay relevant. Maybe some safety money comes here. They still haven't announced their buyback or what it's going to be raised to, if it's going to be raised. And also they have the refresh on some of their handsets for the 9th. So it's still hanging in there. But this just goes to show you, like, when things fall out of a range, they could fall out fast. So when this fell out of 122, it went all the way down to 112 fast, so 10 points. 7 for 1 split, that's 70 points. So anyway, when the ranges break, they could break fast. So just know that when you're getting lulled to sleep in the diamonds, just in case the diamonds want to continue lower since they've been below the 200-day for so long. Look at the XLE. XLE at one point was a very, very strong sector. Look, it could do no wrong. And then you had this head and shoulders top pattern here. Okay, left shoulder, head, right shoulder. And then look what happened when it broke below the 200-day. It stayed below it for a little while, probably lulled everyone to sleep, and then pow. That happened fast. And no one at that time thought ExxonMobil, Chevron, all those stocks, oil was going to get so crushed. Came back to it, couldn't get back above it. Came back to it, couldn't get back above it. Broke this spot, and then recently I came in actually along this also today, thinking that perhaps some commitment stays there, and we could see some type of flag to get some kind of continuation move to the upside. And then once it couldn't hold, and it was down 75 cents in the first 5 minutes, I'm like, I'm done. I was playing it long verse 68.77 or 68.50, and then boom, now it's back to making probably new lows again. Who knows where it can go? It's still below every moving average. So that's why I come up with the rule where if you're actively trading, stocks, and you could have swing stocks in your account, when the market's trending, as long as we're above the 8-21 day, you try and stay long 5-6 of the best names. But once it breaks the 8-21 day, you either reduce or get out, and then you can trade it back and forth and hold it for a day and a half or something like that. But then these things become vulnerable where they test the 50, the 100, and then the 200 is for the bigger players, the institutions, where if there's no support at the 200-day and it breaks below the 200-day and you can't get back above it in 4 or 5 sessions and it's not a seller's trap, then you better get out of the way as an investment, because as you saw with all those oil names and the coal names and the natural gas names, they get annihilated. At one point, people did think FCX was a good stock. At one point, right? Back here, it looked just fine. And then what happened? Right here, there it broke. There, it looked like back here, it had this like breakout failure, which was, maybe sell signal number 1. And here at the 200-day, you could have been like, oh, let me be careful. Once it went below and didn't get back above it, all of a sudden, FCX was no longer a good stock. Here's when you had a tradable move, and then this is when traders could have gotten rid of it, and this is when institutions said, I'm done with it. And if you did get, could have hurt at 35 to get rid of it, but could have hurt a heck of a lot more down here, as it stayed below all the moving averages, never got back above the 200-day, and now look at it. So you never know where these things are going to go, and you don't want to marry stocks. You want to use technicals in order to hold with them. So if just say you got rid of your MBLY today, and in the next week or two it goes sideways, reclaims the moving averages, you can always get back in it. But if you're in it for the long haul, you got to give it a little bit more room, because sometimes you feel good about exiting something and then you never get back in it with the right buyable setup, and then it goes where you want it to go over time, and you made a good trade short term, but longer term it wound up working out. So that's when all the different time frames get messed up. But for right now, it's August. It's, I think, the 19th. Today was, for me, I got a little spun around, and the jury's kind of out on what's going on here. You have Europe, that the DAX went below the 200-day yesterday. It had downside follow through today, down 2%. You have Asia, which is volatile and kind of broken. You have a lot of our names, or just names, that were taken to the woodshed, while the S&P still hasn't really come in. So there's still a lot to kind of be worried about, and be on your toes about. But there's movement enough that if you're careful enough, there's action. And there were some big ranges today. It could have been on the right side or the wrong side today. I was a little bit more on the wrong side than the right side, but it happens. Try and brush it off, and we'll see what happens next. I do have my webinar at 4:30 for Redler All Access, and we're opening it up a little bit. So if you want to come in, you could probably hear a little bit of this again, but a little bit more thoroughly. And tomorrow I will see you at the morning call. Have a good night.